Hey folks, Thursday, April 23rd, 2026. Welcome. Like and subscribe. Right, so we're taking a look at our trades for today. We had two of them. One, we earned $34, the other one, $3.20. Let's take a look at the execution history in this one. Run 611 before market open. This stock actually started moving up when it was around a little over $3. I did not take it. I was doing something else, and by the time I got on, I just was able to scrape the top off of that breakout and took 300 shares at 566, and then scaled out as it moved up to 589, and then as it came back down, took the rest of the shares. So we rated it an A for a top breakout stock, and we got, let's see, half a cent per share out of that. And this trade actually took me to $1,999 on my P&L, which is something that I've been watching since the beginning of the year, as it slowly dwindled down to around 1,500, and now I've been earning my way back. And so I needed another dollar and still had a couple of $100 in the account. So I went ahead and took another 40 shares around 556 off of the dip, and as it finally tried to push to 564, I took it out at $3.20. I could have held it for more. It did go to $6.24, but hey, you know what? I hit 2002, and that's all that matters. So this is an A trade, only 1 cent per share today, but it's 100%, and it's $37 that we continue to add to our winnings. And so for the month now, we're up to $177. Our win ratio is a good 76%, and our profit factor remains 1.72, which is very nice and high. And we've got 13 to 15 days green. And here we continue to pile it up. We have 5 days left in April to trade. I don't have to trade tomorrow, actually, but I think I'm still going to continue to show up. I'm just not going to be a lot more cautious, just like I was today. If we take a look at our reports, we continue to improve. As you can see here, this is the current period. It continues to go up versus the prior period. This is for 30 days. And we continue to show improvement over the prior period. The one I wanted to show you guys was the 90 days, because this is really, really relevant. So the dashed line here is the prior 90 days. This blue line is the current 90 days. And if we look here, well, actually, let's start here, because this is quite telling. You can see there that on day 73, the comparison is $956 to $34. So that's a $900 drawdown there. And then as we get closer to day 82, we get to within about $490. And that was 3 days ago. And then yesterday we came down to 485. And today we took it down to 474. And so as long as we continue to improve, we'll continue to scale up and watch that drawdown down. And the one of the trades today, the small $3 winner, I just said it was a level support and resistance that I thought would rise above support and resistance. So I took it, labeled it that way. But the most of the trades have been breakouts and bounce, and breakout and bounce are the same thing here. It's just, this is breakout is the old classification, but you can see there that we continue to be 100%, and it's only the older trades where we lost a lot of money. You can tell there that that are bad, but other than that, we're okay. So we'll show up in the morning tomorrow, and if there's something good, we'll go. Otherwise, we'll just do like today. I sat almost the entire pre-market. I got on at 4 a.m. Pacific and did not trade until 6:11 for 2 hours. So discipline is key. So here we're looking at my cash balance over the first 4 months of the year. And you can see there on January 2nd, I started out with a balance of $2,474. And by the end of January, I had lost 400 of those dollars. February, I lost $200 more, and another 150 or so in March. And I think at the beginning of April, that had reached about $1,500. So in April, I've been really dedicated to trying to stay green, even small, and only take trades that are worthwhile. And I climbed to yesterday of a cash balance of 1964. And today, with the $37 that I made, for me, it's a threshold. We've reached $2,002. So I still got another $472 to go, but I can't be in a hurry to get there. And we have May. The market is looking good, so the possibility of getting back up there is really good. So we'll continue to do the same things and not take bad trades. Try to avoid FOMO, and wherever we lose, we have to make sure that we mitigate that and make it only small losses, as opposed to huge losses. That which was what was happening earlier in the year. So this is a great recovery, and certainly better performance than 2025. So hopefully our year will turn green by the time December comes around. So hopefully this helps you guys understand where I'm at, and when I'm talking about balances and tradings and what I'm doing. That's my cash balance journey. So we're looking at CPIX this morning around 6:08 Pacific time. It had been moving up, and I did not pay attention. I did hear it in the scanner, but I was doing something else. And it has moved up from a little bit above $3 and into $5. So I don't think I was watching it at this point, or I may have been, but I didn't like the fact that it was already close to the upper VWAP band, and so I held off. But I did go in, and the lines that you see me drawing for resistance are off of the daily chart, and as soon as I apply them on the daily chart, they automatically apply on the on all the other charts. So that's where those lines come from. And what I did not like at this level was the fact that 1, 2, 3, 4 resistance bars were right there close to each other, but the top bar had room to the top, and it was wide open. So I don't know if it was exactly a blue sky area, but it certainly was there. So I continued to watch it, and at this point, I had been on since even before 4 a.m. Pacific. So even before pre-market opened, I was up. I couldn't sleep. And so I was doing other things until the market opened, and I watched many of the other stocks, and I just didn't like their setups. And what I'm finding out is that the more I observe and the less I trade, the more clarity and mental acuity I have towards identifying breaks, identifying when the stocks are going to come down. So here I finally jump in, and I tried to jump in. It didn't fill me. It didn't mark the order there at 540, and by that it had already. Look at that! It just keeps going up. So I missed it. I missed the 540 entry, which would have given me a little bit more money. But the 10-second chart up in the top right hand there had a little bit of red, a little bit of pullback. And so I said, I think I'm going to be more careful. And I wasn't sure as to how many shares I was going to take, whether I was going to go all in, or whether I was going to just, go in with 5, 10 shares. And here, when I see this move past 550, then I start setting, and I purchased 300 at $5.66. And you'll see that immediately I'm dropped, and I'm down $72 there at one point. But it seemed like it had strength. And what I was looking at is a level 2, and the active trader on the right bottom there And what I was looking for is to ensure that the sellers did not outnumber the buyers. So when you have large number of hidden, well, not hidden because you can't see hidden buyers there, but the numbers of sellers are a lot higher, or they pop in and pop out. It just means that they want to keep the stock price down, or they're selling into the the momentum, and that makes it difficult because then it throws off the older buyers who are looking at that and say, "Oh, you know, these sellers are way too high. I'm just going to drop." So here we finally start to recover and we start go up. And on the day I knew I was down, I was close to being to $2,000, and here you can see it went quite a bit, but I wasn't able to catch the very top and get 60, $70. I only took half off, and but I did scale out. And what happens is pre-market and the market's moving quickly. The price action moves very quickly, and uh, the easiest way is that if you're sure and you know where you're going to sell, is to just set your sell on the active trader ladder there. And I have been doing very bad at doing that, but I did get out at 577, so that's an 11-cent win on 300 shares and enough for $34. And this got me to 1,999 and some cents on my cash account. So I was really happy and excited because, of course, I was near the 2,000 mark, whole dollar, and been a climb back for me from 1,500 to climb all the way to 2,000. It is a threshold, and it's actually a very good accomplishment, I think. So what I decided to do is I still had some money left, enough to buy another 40 shares at this price. So I I started watching it and looked for an entry, and I thought it had a possibility perhaps that it could go down, not on this candle bar here, but on others. And those were the only two trades that I took. So I was just looking for another dollar or so just to hit that 2,000 mark. And you're going to see my trade, and I'm going to hit the 2,000 mark, of course. But stay tuned because I'm going to watch CPIX as it goes through, and show you guys what happens um, to the stock. And then I decided to wait and record the open. I did not have an opportunity to go live, so I recorded the open because a lot of folks do want to see the open. And so if you didn't get a chance to trade today for whatever reason and you're watching this playback, um, you can see the open and you can see a couple of the stocks that were moving. And what is important in them is the fact that what I mentioned prior in the video here, that when you become an observer, you begin to look at the price action, and you begin to see things that you didn't see before, and that's really important. And because it allows you to say, "Wow, I think I'm going to draw here because I think this is what's going to happen." And on that one particular stock, AUUD, which uh, started to move up at the open and then eventually crashed, I will show you how I made two predictions, and how I was able to gauge what was going to happen and how I made them. And obviously, I only had, I think I had $40 left, and I wasn't going to spend that $40 trying to get any more. It just didn't matter to me. At this point, my goal for the week, my goal for April is there. Here's where I enter on the 40 shares at 556 on the pullback. And like I said, I was only looking for a dollar, so I was going to hold and let it go. Hopefully, it didn't cause me to lose 10, $15, and then I have to wait for tomorrow to hit my goal. And I don't set a daily goal, I don't set a weekly goal, I don't set a monthly goal. My objective is to stay green, to make good trades, and come out green and no big red uh, days. That's really the objectives, and it has helped me to stick to that. And as I separate myself from goals, from the P&L, from whatever the numbers are, I can focus more on the technical aspect. I am able to watch and see and evaluate things a little better, and it helps me to predict where things are going, where the price is going to go, and not enter and take, you know, I don't want to say dumb trades, because I think a lot of folks take trades a lot earlier than I do, and they come out swinging and make good money. But the problem with that is that you're just swinging for the fences. So here we finally cross over. I didn't want to take a chance on anything else. I just was looking for $1. I got three, and I took it and I moved on. And I think those folks will buy early. I'm sure some folks got in at 350 or at 4, and they carried it all the way to 5 and made good bank today. But they also go in on those other stocks that are climbing and then take a dip, and the bar just jackknives down and they lose. So that's one of the issues that I identified, that what was happening to me, in an eagerness to earn money back or to be green. I was doing the same thing, watching the news. Oh, this one has news, jump in, and all of a sudden it goes up and it falls. Now, I was lucky on some, but the problem was there weren't enough of those positive that earned me enough money to offset what I was losing on so one out of three or four stocks would hold their gains, the other three or four would lose them. And so that was a 10% win rate, and four stocks losing over $50, and only one stock making $50-$70 wasn't going to cut it. So if you go through your P&L, go through your trades and take a look, you can exactly see where you're going wrong and what you need to change. And some folks say, "Oh, I don't need to change my mental acuity. I don't need to change my emotions. I know I'm doing things right." But if you're still losing on paper, and you're still winning less, or have less green and have more red days than green days, take a look at those amounts. Take a look at your days. I mean, you don't have to go into great depth to evaluate them. Put them on a calendar and journal them so that you know exactly what's going on. And it does help quite a bit. I didn't think that. I said, why am I going to record my on video my trades? But once I started it, I started improving. Then folks had mentioned you need to document, how you did on a trade and everything. And in my head, I thought that was I said, no, that's for, long-term investors, the people that trade large caps, the people that do more research. I think they deserve it. I mean, I'm just a momentum scalper, so I'm just going to watch the candle bar, hit it, pump, sell, and I'm out and I'm good. I don't need to document what happened. I don't need to remember. I just need to know that I was green. But it does, by not documenting the trades, by not looking at them a little bit carefully, you lose something. You lose a connection to the methods that you are using, and you discover that you were just wildly jumping in, and it's no difference than buying a lottery ticket. So, so I started to actually document them. I got a subscription for a trade journal, and a lot of folks use it, and I started to track my trades, and then I noticed all the metrics on there. I wasn't paying attention to them. It didn't really speak to me, and it didn't help me. And that's when I started to build my app, so that the app understands how I trade. The app is easy to use, and I can go in there and document it pretty easy. One of the things I see some folks out there, they've got these huge notebooks and they're writing their notebooks, and yeah, they record everything and repeat everything. But 10 days from now, if they have to go through that notebook, they're not going to do it because it's too tedious to go through it. Or you're in a hurry and you write messily and you can't read it, or it's just not something to do. So, in building this journal trade app that I have, instead of forcing me to type in everything, I just have quick tags like you saw that I was doing. I just go in there and tag with some simple English understandable words instead of the technical jargon related to stock trading. And then when I'm reviewing the reports, I can understand exactly what was happening. And that has helped me quite a bit to take good trades. So we continue to watch CPIX here. We're at 6:22 a.m., 8 minutes from the open, and this is where I left money on the table, and at least on the 40 shares on the last trade that I took, because it did go up to $6. So we could have had a little bit more money, but that's okay. On 40 shares, we're not going to make much. So from 56, it would have been what, 44 cents across 40. So I I wasn't looking for to score a huge amount. I was just looking for to make it to 2,000. And I was wondering last night. I went to sleep early to make sure that I was uh, fresh this morning, and I actually woke up at 2 a.m., a little over 2:30 a.m. Pacific, and got on the computer and started working on my app while the market opened. And even when it opened, I wasn't even watching, to tell you the truth. So even if you find my commentaries here a little boring or watching the screen, more than like it's paint drying, um, like I said, let's wait for the open. We got another 6 minutes for the open. Then we'll watch the open a little bit on some of the stocks. I didn't look at every single stock that's on the scanner, but there you can see on the left hand side we had the stocks that were moving, and there was quite a bit. There was even quite a few that had news, and there were some that were where you could scalp for 10, 20 cents, maybe even 30 or 40 cents. Um, when I decided to take CPIX as I was taking it at 566, I jumped in also because I heard the one of the scanners call out the fact that it was up 80%. So that's another thing that I've been trying to do is if a stock is up 120% or more, I'm I'm just gonna cry that I didn't take it sooner, but I'm not gonna chase it beyond that. So ideally, at 50, 60% to me is a little better. I've seen some stocks at 10%, and I said, no, I'm not going to bother at 10%. And then later on in the day, they're up 50, 60%. So, but at the time that I looked at them, they had no volume. So it's a matter of timing. And the other thing that I have been doing is not jumping around stocks. So as you can see up on the watch list there, we had PAPL, PMEC early, penny stocks that were moving. We had YCBD. We had other cannabis related stocks moving. I decided not to pay attention to them at all. I just said I'm going to ignore them. I I looked at PMEC. I looked at the chart. I did not like it. I looked at PAPL. Likewise, I did not like it. I even looked at AUUD earlier in the morning, and I did not like it. MWYN started to move, and I said, this has potential. I think it went up from 60 to 90 cents. There's if somebody caught it, that's terrific. That's great. It wasn't for me. I wasn't about to risk having a red day uh, chasing one of those type stocks, not because they were penny stocks, because the chart did not speak to me. It just I didn't see it. So here finally, it looks like CPIX had reached its high. It doesn't appear to be its high a day, but it is. It did reach a high a day there, close to 624, and now the volume starts to slow down. And what I start to watch again is the number of sellers versus the number of buyers. And the reason I like the Thinkorswim Active Ladder there, even if you don't use it to trade, is because it shows the cumulative. So over in the right hand side, you'll see a little plus and a minus, which are the zoom buttons. You've got two arrows that are together. If you click that, it'll expand it and show it to you one line at a time. And if you use the minus sign, it'll collapse and zoom out and or zoom in, whichever you want to think. But what it does is it consolidate prices so that it doesn't show you, like 664, 665, 666, and on penny stocks it doesn't show you all that fluff, which is since they extend out to four digits, it doesn't show you all of that, so it begins to collapse. So here you can see it's 426, 476, 526. What's it? Every 50 cents, and then and you can see there was a cumulative amount of sellers that reached 15,000. So there you can tell more or less that people are starting to sell, even though there are eager folks starting to buy. But those people that are probably left buying here are shorting the stock. So they're they're just going in to buy it now so that they can short. Excuse me, I'm sleepy now. So down at the bottom, you see that the DTSS Smooth High Kanashi, and that's a scanner that comes from the guy. I forgot who his name was, Trey, or he's got scanners. He's got code, uh, and you pay a subscription for him. This is one of the free scanners that he offers, and I opted to use it simply because of that green bar. It's pretty relevant, and so I look and I use that. I also look have another chart, and what I do is I look at the EMAs and how they cross VWAP. So if a certain stock, if VWAP line is starting to get close to the 20 or the 50, then you know that it's going to curl down. That's the easiest way. So uh, that's the way I learned to check on them. And you can see there that the TSS smooth Heikinashi line is starting to turn red there slightly. And here we are at the open. We're at 6:30 Pacific, and it starts to make moves. The problem is, if you look at the 5 minute chart, which is there to the right, it's very lower volume. There isn't any height of volume. And the number of sellers has increased, and they're pushing to sell more. At the same time, what I did was I changed my scanner to take a look at only stocks that Thinkorswim says they have 20 million shares or less, which should equate to floats less than 20 million. Not all the time. Don't quote me on that because I don't know the math and I have no idea how Thinkorswim calculates shares, which is a pity that they don't have the float in there. And there you can see it. It's just too much resistance above six, and the sellers are starting to come in, and all the folks that shorted it are looking and taking their profit, and then the volume starts to turn red. So what I decided to do is gonna take a look, and I see that AUUD is moving up. And if you watch some of my other videos, you'll notice that I have this alert coming on that watches for a 4-bar pattern. So it watches a green bar, and it looks for the very next candle bar to be red, and then it looks at the third candle bar to be above the prior two candles, and then at the fourth bar to also be green and above the first three candles. And when that pattern is complete, the idea is that it should go up. Now, only in a bullish market. Up until now, that pattern has actually acted in reverse, in the fact that it points to me, telling me that the stock is bearish and that it's about to crash. And which is not the case here in AUUD, where it actually halted. And you know what? I'm gonna halt it here, because there's no sense in making you guys suffer through the halt and then pick it up at. So I did. Uh, I did notice that I had changed stock, so I didn't cut on AUUD. So ASTI was moving, and I started to watch that again. One of the things that I watch for is once a stock hits the upper band of VWAP, to me it's pretty much reached its peak, and it's probably a little too high to trade. And I put the danger call. This one here actually has a little bit lower volume than AUUD, but then you start seeing the sellers come in. And you can see there that I also marked out the resistance levels at the top, above $6-7. And so we have both active buyers on the bear side and on the bull side. So I abandoned ASTI, and sure enough, it didn't hold. It had news, but it was very brief, and it did not hold its value there pretty much. And we had other ones. These were a little bit too higher priced, and DZOO did not appear to have news. And ASTI completely dropped out of my scanners there. And now we return to AUUD. So here I think we have a couple of minutes to go. And there's a lot of stuff blinking. Blinking yellow, blinking red. Uh, both Nvidia and the SPY are moving a little downward. So I think I can cut a couple of minutes out of here. So let me pause this and get right back to it. All right, so we're back from the halt. It starts moving up, and it had a great move. So if you got in there, off of VWAP, that was a great move. I just don't like it when stocks cross VWAP the very first time, and then because I'm looking for a pullback and then a second pull. And it's still 6:37 a.m. Pacific, so like I said, I want to avoid the first 15 minutes of the open if at all possible. but the stock continues to move, starts to hit that upper VWAP band. And I'm sure folks made some money on there. There was good moves on this one. Nobody expected it, I think. It wasn't expected, at least not by me, because I had seen it sell off in the pre-market. So here, what happens is it gets halted at 929, and the thing I noticed about both of these halts was that the stock only climbed 2 or 3 cents above where it halted, and I thought, I see danger happening. So what I'm doing here is I marked the line right about 6:44, 6:45 a.m. I predict that this stock is going to drop. Okay, so here it comes back from the halt and it starts moving up. So this is a prediction I made. This is one of two. So if you didn't, if you cut out of the video, those folks missed out. If you hanged in, then you get to watch my prediction here. And this is just based on EMAs. The EMAs were about to cross the VWAP. They were too close together. And that told me that this was going to falter. And it goes into another halt. And look at that. And I'm sure that folks that were holding was really bad. And you could see the number of sellers there was in the 180,000 cumulative shares. And so naturally what folks would expect is, oh yeah, maybe there's an opportunity. We'll jump in here on the reclaim and we'll go up, right? So the EMA lines 20 and 50 had really not crossed over yet, but they were within, a very small space, close to doing so. And so I continue to watch it. And in a few seconds here, you're going to see me make a second prediction about this stock. And I'm watching it go up. Yeah, it's green. You want to jump in? Be my guest. I'm looking at the level 2 and I'm looking at the ladder and it looks good. This is classic bull trap right here. It really looks good. There's a lot. There appears to be more buyers than sellers. I mean, if I had 1,000 shares to buy, if I could buy 1,000 shares, I would have bought 1,000 shares here, according to everything except that my intuition and my evaluation of the MACD and the EMAs about to cross the VWAP line told me that this stock was pretty much done. So if you like the videos, like and subscribe. We can use all the likes. Help promote the channel and the content to other folks who may be out there and struggling, who want to watch and entertain themselves. One thing I've noticed is that I get more likes and more views when I lose than when I when I am green. So here we've got a little bar there with a nice long topping wick off of the top VWAP. So that's another little sign there. We got that upside down hammer. The MACDs are starting to close down. The EMAs are starting to get close and are about to cross VWAP. And here's my prediction. Now pay attention. Pay attention, folks. Because I don't promote to say that I'm a genius or that I'm able to see better than anyone else what a stock is going to do. In this particular instance, it was pretty clear to me what was going to happen, and I was able to predict 2 moves to the downside. And what I attribute it to is the fact that my mind was clear. I didn't have any stake in the game. I had already hit my $2,000 P&L, and I didn't need to trade it anymore. and I was just an observer, like watching a tennis game go from left to right, or a soccer game, and uh, or a basketball game. Some folks score here, some folks score there. If it's busy or not, whether people are running back and forth, bullish or bearish. But I was just an observer, and by being an observer, I was able to discern that this stock would hit that point and start crashing down. Hope you enjoyed the video. I certainly did. I certainly have learned a lot and have enjoyed the experience. I mean, and this is being recorded. If you know, there's no way I could have recorded this after the fact, because obviously I put the lines on the chart and we're watching the price action. So, and at this point, I think that the market will calm down. It's 8:11 right now on the West Coast when I'm watching this, and probably the market has changed and it's probably doing a little better now. But I suspect that it's good. Movement's going to be a little tepid, and tomorrow will be a little bit dangerous. So I don't read candlestick patterns. I don't play into it. There's no point. But there's two upside down hammers there. The first one, that top bar that goes all the way above 10. And then that second one that stops right there where I drew the resistance around 949. And look at that. Have a great day, everyone. Hope you were green.